Yes guys, so welcome back. So we have discussed about whether an arrangement contains a lease or not. You're done with that topic. Let's get into three more topics now for this session. Those three topics which I'm going to discuss in this session is number one, where a contract contains the right to use of multiple assets. A contract conveys a right to use of multiple assets. Can I separate the right to use of each asset and recognize it separately under IND AS 116? First concept. Second one, where multiple contracts are entered into at the same time or near the same time with the same party, then can I combine these contracts as a single right of use asset and recognized under IND AS 116? Third one, regarding separation of lease and non-lease components in a lease. In a contract, there could be a lease or a non-lease components. How do I separate them and recognize them separately is what we have to discuss as a third part. These are the three important aspects that I have to cover as far as this session is concerned. Now, let's begin with. Let's say, for example, a contract or a part of a contract can contain a lease. Same way, a contract can convey a right to use of multiple assets. A right to use of multiple assets. Then in such case, can I separate each right of use asset and recognize it under IND AS 116 separately? Or is it compulsory for me to combine all the assets and treat it as a single lease contract under IND AS 116? This is the concept that I have to start with. First, put up a heading, a separation of lease contracts. Of lease contracts, of lease components in a contract. Why does this concept come up? Because I'm saying that the contract contains right to use of multiple assets. For example, there is a supplier A. The supplier has given to the customer B a right to use a factory premises. Or factory establishment. This is my right to use or right of use. He has given a right of use for a factory establishment. This factory establishment has multiple assets in it. Ease of purpose, I am taking only three things. One is called as a building, a factory shed, or let's say I'm talking about a land associated to the factory, and the machinery. All three combined have been eligible for right to use to customer B. Now my concept is, should I recognize these three assets, building, land and machinery, as a separate lease component under IND AS 116, or should I combine all the three into one single lease contract under IND AS 116? So the contract is conveying a right of use for building, machinery and land. So this is my first asset. second asset, third asset. Should the customer B recognize the lease component of each asset separately, or should he combine all the three assets to symbolize or to recognize as a single lease component under IND AS 116? Let's write down. When a contract conveys a right to use multiple assets, conveys right to use multiple assets, and each of such assets can be considered as separate lease contract, lease component if the contract conveys a right to use multiple assets, then each of such asset is included in the contract can be considered as a separate asset if two conditions are necessary to be satisfied. These two conditions are not new to us. We did look at these conditions earlier under lease of low value assets. What are those two conditions? Can you let me know? If you remember, please tell me. First one, lessee can benefit from the use of asset on its own or with other resources readily available to the lessee. Condition number 2. Underlying asset is not highly dependent or interrelated with other assets in the contract. With other assets in the contract. These are the two conditions. Just a second, let me hide myself. Let me hide myself so that it is clearly visible. Look at what he's saying. He's saying, if the contract conveys a right to use multiple assets, then each of that assets shall be considered as a separate lease component as per IND AS 116. Only if the lessee can benefit from the use of asset by itself on its own or with other resources which are readily available to the customer, to the lessee, or with other resources which are readily available with the lessee, and the underlying asset is not highly dependent or interrelated with the other assets in the contract. it is not highly dependent or interrelated with other assets in the contract. If you remember, I already told you that these paragraphs are very similar to low value assets, lease of low value assets in IND AS 116, which we have already discussed earlier under recognition exemptions, and distinct goods and services, this we will define in IND AS 115. Definition is exactly similar. There is no difference as far as the definition is concerned. That the lessee will benefit from the use of asset by itself or with other assets which are readily available with the enterprise. And the underlying asset is not highly dependent or interrelated with other assets in the contract. If these two conditions together are satisfied, then you can call or then you can recognize each of the asset in the contract as a separate lease component. Clear? Now that we have written this sentence, write the other way also. If either of these two conditions or any of these two conditions are not satisfied, then all the assets in the contract should be considered as a single lease component under IND AS 116. If any of these conditions are not satisfied, all assets are combined to represent a single lease component. In this given example which I have given you, there is a building, land and machinery which are included in the factory establishment. Can you satisfy these conditions? Yes. The building by itself can be used. It is nothing related to the land and the machinery. If you can use the building by itself along with the land, maybe let's say land and building together can be combined to signify one single lease component, while this machinery can be considered as a separate lease component because only the lease of the machinery could also benefit the lessee. The machinery can be taken to any other location and the lessee can extract benefit from this machinery alone. It is not heavily interlinked or it is not highly integrated with the land and the building. It is easy for me to transport the machinery from one location to other location and I can derive benefit from the machinery alone. Then machinery should be separated and identified as a separate lease component. Land and building together should be considered a single lease component because they are highly interrelated and interdependent on each other. Clear? Today even that is not possible, guys. Today the factory sheds have become so sophisticated that a customer can actually remove the entire factory shed from one place and relocate it to another place. So even the factory building also can be relocated in certain situations. So, but in general sense, land and building together should be considered as a single lease component and machinery should be considered as a separate lease component as far as this example is concerned. What are the conditions necessary to be satisfied for treating each asset as a separate lease component? The lessee can benefit from the use of asset on its own or with other resources in combination which are readily available to the SC. And the underlying asset which I am talking about is not highly dependent or interrelated with other assets in the contract. If these two conditions are satisfied, treat each component of the contract as a separate lease element. If they cannot be satisfied, or if any of the condition is not satisfied, then I will treat all the lease components together as a single lease asset or a single contract. Now let's get into the topic of combination of contract. What do you mean by this concept of combination of contracts, and why does this arise? This concept, similar one, we will read in IND AS 115. We will see it there as well. Similar conditions will be put up. There is no significant difference. It will be similar. When I talk about IND AS 115, I'll again refer back to IND AS 116 as well. But as of now, I'm telling you that it is very similar to a paragraph we will discuss under IND AS 115. What is this combination of contracts, and what am I talking about? In a simple sense, I am saying, if you have entered into a lease of multiple assets, each one in a separate contract. So let's say contract A, B, C. A indicates an identified asset in the contract. A indicates X, Y indicates, B indicates Y, C indicates Z. These are the three identified assets in three different contracts, A, B, and C. Okay. If these three contracts are entered into with the same party, or related to same party, at the same time, or near the same time. May not be exactly at the same time, but it is near the same time. One I have entered on 15th August, next one I entered on 16th August, next one I entered on 17th August. If I am entering into such contracts with different identified assets under each contract at the same time or near the same time, and if these contracts are with the same party or people related to the same party, then in such cases, these contracts can be combined. They can be combined if they are entered into at the same time or near the same time with the same party or a related person to the same party. These three contracts for identified assets of X, Y, and Z, they can be combined. If what is the conditions necessary to be satisfied for me to combine these contracts if they are entered into with the same party at the same time or near the same time? There are three conditions which are necessary to be satisfied. What are the three conditions which are necessary to be satisfied? Let's look at them. If I have entered into with the same party or a relative of the same party at the same time or near the same time, then these contracts are eligible to be combined for the purpose of IND AS 116. For the purpose of IND AS 116, they can be combined if three conditions are necessary to be satisfied. Let's write down all the three conditions. First condition. Condition number 1. That the contracts are negotiated as a single package. The contracts are negotiated as a single package. I'll talk about what do you mean by single package. Wait for it. Plus, next condition to be satisfied. Second condition. The consideration of one contract depends on price and performance of other contract. The consideration of one of the contract is depending upon the price and performance of the other contract. Third condition. Last condition. Rights of underlying assets conveyed in the contract or conveyed in the contracts are single lease component Look at these three conditions which are necessary to be satisfied for me to combine these contracts to indicate one single lease contract or one single leased asset. Contracts are negotiated as a single package. The consideration of one contract is dependent upon the performance and the price of the other contract. All the underlying assets conveyed in the contracts, they represent a single lease component. Now, question comes up. First of all, what do you mean by single package? Single package indicates the commercial objective cannot be understood without considering the contracts together. Take the example of the CGU that we have considered under IND AS 36. What happens in a CGU? There are multiple assets which together are deriving certain cash flows. Each asset individually does not derive any cash flows, independent cash flows. So therefore, even if I have written a contract For a right of use of each asset individually do not derive any significant cash flows. There is no commercial objective in leasing out only this asset and leaving out the other two assets of the CGU. Without the other two assets, this asset does not generate any cash flows. So the commercial objective of the contract can only be understood if you take all the contracts together. If you cannot understand the commercial objective without considering the contracts together, then you mean that the contracts are negotiated as a single package. Clear? The price of the one contract or consideration of one contract depends upon the price and performance of other contracts. You take only A, I'll give it to you at 100. You take A and B, I'll give it to you at 120. That is the price. If you take B alone, I'll give it to you at 50. So A alone 100, B alone 50, both combined should have been 150. But no, if you take both the leases together, I'll give it to you at only 120 rupees. Therefore, the consideration of one contract depends upon the price and performance of other contract. I will not give you a lease of A unless and until you take the lease of B and C also. So, the contract is dependent upon the performance of B and C as well. Rights of the underlying asset conveyed in the contract are a single lease component. What do you mean by single lease component? That means each asset in contract do not benefit customer by itself. And they are highly dependent and integrated to assets in other contracts. I'll hide myself so that you can see it. Each asset in the contract does not benefit the customer by itself. Each of such asset is highly dependent and integrated with other assets in the other contracts. What do you mean by that? There is no commercial objective because this X alone does not give me any economic benefit. Y alone does not give me economic benefit. Z alone does not give me economic benefit. All three combined together will give me economic benefit because all three are integrated and interrelated and generate cash flows as a CGU which are highly dependent on each other. Therefore, they do not benefit the enterprise by itself or the customer on its own. It is highly dependent and integrated with other assets or other contracts. Take down these 3 points. Make sure that you're assessing those 3 points. In a way, you can say it is exactly inverse of the first discussion that we had. So if all three conditions are satisfied together, then you can say that these contracts which are entered into at the same time or near the same time with the same party or the related enterprise of the same party can be combined as a single lease component and recognized under IND AS 116. Here. So we have seen two things so far. One, we have seen where multiple assets are given in a contract and each of that component can be considered as a separate lease as per IND AS 116. And we have seen where combination of contracts where different contracts are written for different assets, but all those three components have to be treated as a single lease component under IND AS 116. So we have seen and we have discussed these two. Now let's come into the aspect of the next important part and the most important part of our discussion in this session. We'll move along. Separation of lease and non-lease components. What is this concept? You will carefully look at it and you will understand that there is a very peculiar term which you will again repeat. Okay, we'll again repeat this term. It's called as practical expedient offered in the standard. Practical expedient offered by IND AS 116. Practical expedient means he is trying to simplify your accounting by giving this effortless option. Without putting any effort, you have this option given under IND AS 116. That is what he is trying to indicate. Now my question is, what is this components of lease and what are non-lease components in a contract? If you remember our initial discussion on the standard, I told you a contract or a part of a contract can contain a lease if it satisfies the conditions that there is an identified asset. Number two, the customer can take substantially all the benefits derived from that asset throughout the period of its use. Number three, the customer has a right to control or right to direct the use of that particular asset. If these three conditions are satisfied, a contract or a part of a contract can contain a lease. When you say part of a contract, that means there could always be some other parts of the contract which may not indicate a lease. For example, let's say I received a contract for the use of a particular car. Car is my favorite example. Even if you remember IND AS 116 component approach, I spoke about tires of the car, the remaining parts of the cars. So car is my favorite example. Let's say under a contract, he has given you with a customer not just the lease of a car, but he also added maintenance of a car periodically plus a chauffeur or a driver along with that particular car. Now, car is an identified asset. Yes. The consideration paid for a car should be considered or should be accounted as per IND AS 116. Yes. But the contract also includes a consideration for periodic maintenance of the vehicle. Also includes periodic maintenance of the vehicle. Also includes the salary of the driver, which is not a particular lease because the driver is not an identified asset. It's a pure case of a service. So therefore, there is a lease along with non-lease components which are included in it. There is a lease along with non-lease components which are included in it. So let's look at it. Put a heading. Separation of lease and non-lease components in a contract. Separation of lease and non-lease components in a contract. What is this lease and non-lease components in a contract which I am talking about? Let's say, again, start supplier A has entered into a contract with customer B. The contract particularly conveys a right to use a car plus periodic maintenance plus also includes services of a driver. In this particular case where the contract involves a right to use of an asset, periodic maintenance of the asset, services of a driver, I would look at it like this. The right to use of a particular asset, this is a lease component. But when I'm talking about the periodic maintenance and the service of a driver, these are my non-lease components. So there are lease and non-lease components which are existing together in a single contract. In such case, should I separate between the lease and non-lease component? Answer is yes. Answer is yes. If a contract contains a lease and a non-lease component, then this lease component should be recognized under IND AS 116, while this non-lease component as per respective standard. So I'm saying when the contract contains a lease and a non-lease component, then it is important for me to separate between the lease components and non-lease component. While lease component is recognized under IND AS 116, non-lease components are recognized as per their respective standards. IND AS 116 should not apply. Very good. First of all, you tell me, how do I separate? Because the consideration is one single thing. When your consideration is one single solid amount which is paid periodically, how should I separate this consideration between the lease component and non-lease component? So let's start writing it down. I'll write that statement. If a contract contains a lease component, in this given case your lease component is a car because there's an identified asset in it. Identified asset is a car, and it also includes non-lease components where there is no identified asset in the contract, then the consideration in the contract should be split between lease and non-lease components, between lease and non-lease components in the proportion of their standalone selling price. Their standalone selling price. I have to separate between the lease component and the non-lease component. So in this given example, I'll have to differentiate, or I have to split the consideration between what is the amount paid for right of use of car, what is the amount paid towards periodic maintenance of the car, and the services of a driver, which are non-lease components. On what basis will I separate? I will separate the consideration paid. I will segregate the consideration paid between the car lease component, non-lease component of maintenance and services of a driver in the proportion of their standalone selling price. What do you mean by this standalone selling price? This definition of standalone selling price is also similar to IND AS 115. I'm telling you right now that it is similar to IND AS 115. It is the price at which the customer would be able to purchase the component of contract separately the price at which the customer would be able to purchase the component of the contract separately is called as standalone selling price. What is the price at which I can purchase the car? Let's say, for example, what was the values? Let's say I'm saying the contract is for a period of 5 years. Okay. There were 3 assets included in the contract. One is the car, one is the maintenance, and one is the driver. Service of a driver also offered to me along with the contract. Let's say the car, maintenance and the driver, their standalone prices, I would have been able to acquire the car by paying 5 lakhs. My maintenance contract on an average would have been, let's say, 50,000 rupee per annum. Let's say my driver's salary would have been 15,000 rupee per month. What is the ratio of their standalone selling price if I have to consider? Equate. If I consider all the 3 on a per annum basis, then it should be 5 lakhs. As a proportion, 5 years, 50,000 rupee, 2,50,000. 15,000 rupee per month, 15,000 into 12 into 5, 9 lakhs. Therefore, the contract should be split in the ratio of 5:2.5:9, or better ratio 10:5:18. This is the way in which I'll split the contract of the car maintenance and the driver together, and this is the ratio which I will consider. This is called as standalone selling price. This concept similar to IND AS 115. So many paragraphs are so similar to IND AS 115 days. I'll again discuss about standalone selling price even there. The price at which the customer will be able to purchase each component of the contract separately. So this contract which I have given you for 5 years, car, maintenance and the driver, I will split it in the ratio of their standalone selling prices 10:5:18. So the total contract consideration, the lease proportion is only 10/33. 10/33 is my lease consideration. Standalone selling price should be determined based on market observable inputs wherever we got fair value. We've been using this. This is the same language as used under IND AS 113. IND AS 113, determination of fair value should be dependent or should be based on the market observable inputs, or IND AS 113 requires you to maximize the use of observable inputs and minimize the use of unobservable inputs in determination of fair value. So, in essence, what did we say? We are saying if a contract contains a lease and a non-lease component together, then the lease and the non-lease components should be split. The lease component should be recognized under IND AS 116. Non-lease component should be recognized as per their respective standards. Then the consideration under the contract should be divided between these two portions on the basis of their standalone selling price. What is a standalone selling price? The price at which the customer will be able to purchase the component of a contract separately. If I would have taken the car separately, I would have bought it at 5 lakhs. If I would have taken the contract for maintenance separately, then maintenance contract is 50,000 rupees per annum. If I would have obtained the direct driver services separately, he would have charged me 15,000 rupees per month. So that proportion 10:5:18 is the price at which you will have to recognize the transaction. Standalone selling price should be determined based on market observable inputs. So as per IND AS 113, you have to maximize the use of observable inputs. These are the paragraphs of IND AS 113. Minimize use of unobservable inputs. Based on this, I will try to determine what are their standalone selling price, and in the proportion of their standalone selling prices, I will try to come out with what is this, how should I differentiate or allocate the contract price between the lease component and the non-lease component. Clear? They should be separated or differentiated on the basis of their standalone selling prices. Now, we will come up with a very new concept. The concept which I am going to bring up right now is the concept of practical expedient allowed to the lessee. Practical expedient means it is an effortless way of recognizing. It is an exemption given for the lessee alone. Now, practical expedient is an exemption for effortless recognition under IND AS 116. This effortless recognition under IND AS 116 is only provided to the lessee. What is this practical expedient and what am I talking about? Let's look at this practical expedient or the options which are given to the lessee. It is not offered to the lessor.